Federal Reserve explained. So is the Federal Reserve an innocent bystander? Or are they a player in the game? The truth is, they don't just play the game, they own the casino. First, the most important rule of this casino: the US government can never technically run out of money to pay its debts. Why? Because the Federal Reserve has the ultimate cheat code, a money printer. The Fed is the biggest owner of US debt, and it can create dollars out of thin air to buy every last bond if it wants to. And we've seen them use it. During the 2020 crisis, they hit the panic button. They cut interest rates to zero and printed trillions of dollars to buy up government bonds. As cash flooded the system, bond prices soared and the markets were saved. They proved they could backstop everything. But that created a belief, a promise, that the Fed would always be there to catch the market. So for 2 years, pension funds in Europe, giant insurance companies in Asia, and central banks around the world loaded up on these bonds, thinking they were the safest asset on earth, protected by the Fed. Then the Fed did the unthinkable. To fight inflation, they didn't just tap the brakes. They slammed them on. They initiated the fastest series of interest rate hikes in modern history. They stood by as the bond market, the very one they had inflated, began to violently implode. This was the rug pull. The international investors who trusted the promise were forced to sell at catastrophic losses. The house cashed in. And now, we need to watch what's happening right now, because they are springing the final trap. The narrative in the news for months was about when the Fed would pivot. Well, look around. It's happening. As of December 2025, the Fed has cut rates again, bringing them down to the 3.5% range. Investors are cheering, rushing back into bonds, thinking the bull market is back. But they are missing the real reason for these cuts. The Fed isn't cutting rates because the economy is healthy. Inflation is still sticky near 3%. In a normal world, they should keep rates high, but they can't. They are being forced to cut rates because the US government can no longer afford the interest payments on its own dollar. $38.4 trillion of debt. Think about that. We are now paying nearly $1 trillion a year just in interest. That's more than the entire US defense budget. This rate cut isn't a sign of strength. It is a confession. It's a confession that the debt is too large, and the only way out is to lower the payments and fire up the money printer again. It's checkmate. Saving the bond market this time means sacrificing the dollar itself. So if the world's safest asset is a trap, and the banking system is built on it, the final domino is the currency. Where do you put your money then?
Follow us or subscribe to this channel for the final part of this puzzle.